heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, full coverage of tech earnings ahead as, of course, Palantir soars on unprecedented AI demand while chip makers struggle to weather the industry downturn.
Plus, Salesforce expanding its approach to the generative AI boom with a new set of tools unveiled. Salesforce co-president Sarah Franklin joins us from the Tableau conference in Las Vegas.
And we talk the state of fundraising as the startup UVI raises $100 million for AI-powered car inspections. And we speak to the co-founder of RX3, which has also raised $150 million from athletes and celebrities for its second growth equity fund. But first, that's sort of the private money being raised. What's happening with your publicly traded companies today? We're nervous, cautious. Ed, we see a bit of a pullback on the NASDAQ. We're off by 0.6% at the moment. This is all about worries about that debt ceiling coming front and center for the United States investor, but also what's happening in China, the worry about the import demand not being as strong as we anticipated. Is that global economy, one of the firepowers of the global economy, not returning to growth post-COVID as quickly as we hoped? Golden Dragon, therefore, off by 2.7%. And also anxiety around the regional banks. Once again, front and center, we're off by 0.9%. So that's your macro picture. Let's move on to what's happening in the world of crypto, because today we see a little bit of caution overall. We're just off by about 0.5%. We've had volatility in the OG, that is Bitcoin today. Really, this is more a story of where the dollar direction of travel is ahead of that debt ceiling debacle, whether or not it's more about the crypto. We're just taking a bit of a pause on crypto, it feels, on the day, Ed.
Yeah, I'm afraid the earnings story also putting a lot of pressure to the downside. You take a look at PayPal, lowering its margins outlook for the year. We're going to dig into the details around that later in the show. Lucid Group softer by 8%. Basically re-guiding to the low end of its previously stated forecast. An automaker that's trying to catch up with Tesla but not making a lot of progress. Global Foundries, again, pain for the chip sector seems to be in place through the end of the year. We're going to go to Bloomberg's Ian King, the guy you want to talk to when it comes to semiconductors. Global Foundries softer by 5%. The big name, the big mover to the upside is Palantir, up around 20% so far in Tuesday's session, a couple of percentage points more, and this is a stock that's heading for its biggest jump since January 2021. They've shown their hand with a new AI tool and talked about unprecedented demand for that AI tool during the earnings call. I want to get more on this story and bring in Bloomberg's Lizette Chapman, who's here with us in San Francisco. The Palantir AI tool, Lizette, what is it?
Hey there. Yeah, you know, Palantir had a crackerjack quarter. It had a surprise profit. It said it was going to be profitable not only this current quarter, but for the entire year. And they had unprecedented demand for their AI platform, which, you know, as the CEO, Alex Karp, said, is still under construction. They don't exactly have a pricing strategy, but they are in conversations with hundreds of their customers about incorporating this into their plans.
His turn of phrase, he's not shy of using sometimes more controversial language. He says the large language models as a revolution that will raise ships and sink ships. Well, raise ships and sink ships. I'm fascinated by the fact how this sits with people ultimately about generative AI starting in large language models helping us in the battlefield.
Right. I think that there's been a huge demand for that based on the, you know, increased interest both from the United States Department of Defense as well as our allies. And so it's very much seen as a critical asset in a software-first defense scenario, given the rising tensions with China and Russia and others that are not necessarily friendly to U.S. interests. So there is definitely a defense application. More than half of Palantir's revenue does come from the government sector, which includes not only the Department of Defense and all of its branches, but also those of our allies. So it's very much geared toward a defense context along with some commercial applications.
What's so astonishing about this story? Yeah, the stock's up 20% because of AI. Also, surprise profit, and no one's really talking about it.
Right. Well, let's dig into that a little bit more.
Please go ahead. Yeah.
It's a surprise profit, and one of the things that was interesting was that they achieved this 2 years before they originally said they would. Originally, the plan was for them to hit GAAP profitability by 2025. Now they're saying that they will do it for this full year, and they will maintain profitability while continuing to reorient all of their resources, that's thousands of employees, around building this AI platform.
Absolutely extraordinary. I mean, big move on the stock. Great to have Lizette breaking it all down on the surprise profit side of the equation, as well as all in on AI, as another company seems to be. We thank you so much for coming in and joining the show. Meanwhile, let's turn to another key company that's out with earnings. And look, the share price is not having a similar reaction. Global Foundry signaling weakness in its outlook on muted chip demand. For more, let's go out to Bloomberg's Ian King, the king of all things when it comes to our chip coverage here. Ian, what do you make of what this is signaling more broadly? Because we keep on waiting for there to be some sort of turnaround. Is in any way Global Foundries a bellwether for the sector?
Yeah, 100%. A good way to look at them is a smaller version of TSMC. So through their customers, effectively, they're in the auto chip business, they're in the data center business, they're in the mobile phone business. And, you know, the outlook that they gave today, unfortunately, reflects a lot of what's been said throughout this earnings season, and that's not particularly positive.
Next, therefore, are we tending to start to think we can call a bottom on this? Did they in any way say, OK, this isn't looking good in the meantime, in the here and the now, but we see some sort of light at the end of the tunnel?
Yeah, no, that's a very good question. They're effectively speaking out of both sides of their mouth, which a lot of chip companies have been doing, and what they've been saying is, Q1, that was the worst, that was the absolute bottom, and things will get better from here. But things will not get better at the rate we thought that they would. So that's obviously causing some concern. Can we believe this kind of rose-tinted scenario for the second half of the year? And again, Global Foundry said, not looking as good as we thought it had.
Just on the specifics here, Ian, what particular areas of demand, when you say it's like a good bellwether, a smaller TSMC or whatever the likes, what particular areas of demand are we so worried about?
Smartphones has got to be number one. I mean, they effectively repeated what Qualcomm said, which is China hasn't come back as quick as we thought. The inventory that we said was going to be burned away by the middle of the year looks like it's going to be hanging around into the second half of the year. So they're saying, look, supply is kind of getting better, that position is improving, but demand, where's demand?
It's interesting that NVIDIA was a big drag today, and indeed, as you've pointed out, sort of this has been a bit of a bellwether for the entire chip sector on the day. But NVIDIA actually hit a 52-week high yesterday. The areas, are we going to get a bifurcated market? Are we going to see the chip makers, designers that are all in on AI doing well and those that aren't languishing because they're consumer exposed?
Yeah, I mean, that would appear to be the way to look at it. Look at the only green dot on my screen today was AMD, and that's definitely a play on the future of AI and what investors are expecting to happen there.
Hey, Ian, I'm reading the kicker in your story. Global Foundries is a tiny player in a world dominated by TSMC and Samsung, right? Did you hear any evidence that they're kind of growing and taking market share from those bigger peers? I think we may have lost you there, Ian, but good reporting nonetheless. Bloomberg's Ian King joining us out of San Francisco. Thank you. Now, coming up, Salesforce announced its reimagined generative AI system. Our exclusive discussion with co-president Sarah Franklin. That's next, Caro.
I hope Ian tweets out that answer because it was a really great question, Ed. Meanwhile, let's just take a quick look at what's happening outside of the world of AI for just a hot second before we delve back with Sarah and talk about what's happening with PayPal in the here and now. Again, this is an earnings story, Ed. Again, this one is actually more about overall profitability. This is about full-year margins, adjusted operating margins, not growing as quickly as the company had previously anticipated. We're seeing perhaps 100 basis points, a full percentage point being expanded over the next year, but I'm afraid they'd previously signaled 1.25% or 125 basis points. So that volume didn't do much for the overall takeaway for PayPal. We're off by almost 11%. This is Bloomberg.
Salesforce expanding its approach to generative AI with a reimagined version of its Tableau suite called Tableau GPT and also Tableau Pulse. For more on this, we welcome Salesforce co-president Sarah Franklin, who's coming to us from the Tableau conference out in Las Vegas. Let's get straight to the why. Why is Salesforce doing this and why now?
So big picture, Salesforce has been a pioneer in AI for over a decade. We created Einstein, which brought everyone to have their own data scientist about a decade ago. And now today, we're delivering over 1 trillion predictions every week for all of our hundreds of thousands of customers, which brought them into AI. And now we've moved from predictive to generative. And Salesforce, who has led every seismic shift in technology from going to cloud, to mobile, to social, we are here right at the forefront, leading all of our customers into generative AI with Tableau GPT and Tableau Pulse.
So, Sarah, you're out at the Tableau conference. The other tool announced is Slack GPT. So the question is this you trying to get Salesforce customers to use the services of other things you've acquired in recent years?
So Salesforce, we have an incredible suite across the entire customer 360. Sales, service, marketing, commerce. Slack has been an incredible addition to our portfolio, helping everyone have great, productive employees. And we ask ourselves the question, how do you make every employee more productive? How do you make every customer more happy? How do you provide incredible customer service and sales and marketing and a fully integrated single source of truth of your customers? And so, yes, by providing that entire suite of products for our customers, they can all have better customers and better employees. And it's really important that we give them all of their data so they can unlock it and really have that trusted customer and company data to use generative AI and to have Tableau GPT really bring that data to life for everyone that's involved in customer engagement.
Caroline, data's really the key point, isn't it? Particularly when we're talking about enterprise as a use case for generative AI tools. There's an element of concern about the data, its sourcing and how it's secure.
Yeah, and Sarah, to that point, you used trusted a number of times there, or single source of truth. Is there any concern that generative AI does just make some things up? If there is a hole in the private data that this is being run on, the so-called hallucinations, and many people take issue with that particular turn of phrase, but is that happening? How do you ensure that people are getting the right insights at the right time?
Trust is absolutely paramount, as we've discussed just now. Every company wants to have trusted data. They need to know that they have their data is being trusted. Their customers expect them to trust them with their data. And Salesforce, at our core, we have always had trust as our #1 value. And so having trusted data is important because your AI is only as good as your data. And so no company wants to bring hallucinations, as you say, into the enterprise. They need to know that they can trust the AI. And that's why our approach is founded on trust. And we always have a human in the process because the AI is here to help us, not to replace us. And so that's so important that the data is trusted so that you can also trust the generative AI that's being created from that data.
Interesting. So I'm feeling that you're on the AI's here to augment us humans rather than take away our jobs. But you are someone who's built your career on sort of the democratization of technology. You're someone who's deeply passionate about how, with ease, people can change from a blue-collar job to a white-collar job using, for example, the ways in which you've used trailheading, for example. But are you, broader picture here, thinking AI is going to inevitably take white-collar jobs at the moment?
So I really want to look at generative AI as an incredible opportunity for us. It's really interesting when you rewind back in history and you think of the first computer. The first computer was a person, not a machine. And there was a lot of fear that it would replace us in our jobs. Fast forward to today, we don't have enough skilled talent for all of the jobs that work with computers and work in tech. And so we're already seeing new careers being created, such as prompt engineering or AI illustrations. There's a lot of opportunity. So we, as an industry and as Salesforce, we do take it as our responsibility to skill people up for the future. We created Trailhead as a free online learning platform to democratize all of this technology so everyone can have access and everyone can learn. There's incredible opportunity. And we want to make it easy and accessible for everyone. And we can also hopefully change the ratios in tech in the process. But yes, we are here to help skill people up and help remove the fear from this incredible new generation of technology we see with generative AI.
Sarah, how are these new tools driving sales for Salesforce?
So generative AI is everything that all of our customers are talking about. They are wondering how to future-proof their business in the wake of this new technology trend. And it's here to stay. It's not a fad. And so every single one of our customers is looking to Salesforce right now and saying, we trust you. We know that you will guide us into this future, just like you guided us into cloud, into mobile, into social. And so, yes, every single one of our customers wants Salesforce GPT to help them with Sales GPT, Service GPT, Marketing GPT, and more. And Tableau GPT and Tableau Pulse are incredible innovations that are going to help fuel all of our customers' success.
In your career, as Caroline pointed out, you've been through waves of new technological advancement. This has happened quite quickly. Did Salesforce really plan these tools over a really long period of time, or is this something that you've rushed through in recent weeks in response to what the rest of the industry's done?
So this is what's so powerful is that Salesforce has been a pioneer in AI. For over a decade, we've been investing in Einstein, which is our AI platform. And we have seen, as I mentioned earlier, we have over 1 trillion predictions being done every single week on our AI platform. So this is not something that we're just pulling out of a hat. We have been investing in this for a long time, and we have the world's best data scientists that are here at Salesforce, and they're generating all kinds of incredible large language models that help us create code, that help us create reply response, that help us create great engagement and ways for, like you see with Tableau GPT and Tableau Pulse, for people to really bring their data to life, where in the past they haven't been able to really do that easily. So this has been something Salesforce has been doing for a long time and will continue to be a leader in generative AI.
A leader at a time where the macro headwinds for every single industry are tough at the moment. And Sarah, as you talk about the in-house talent that you have to keep building, it's at a time where we know companies like yours are having to lay off staff, having to slim down in the face of what has been a slowing economy. Have you got the right mix of talent at the moment, do you think?
At Salesforce, we have the most talented engineers, marketeers, salespeople. We have the best people in the business at Salesforce. And we are more equipped than ever. Our company is in a great spot set up for the decades to come. We're laser focused on our customers, on our innovation, and really delivering success for everyone.
Sarah Franklin, thanks for spending some time with us, co-president of Salesforce there. Meanwhile, Ed, one of the biggest concerns, of course, that comes with using artificial intelligence just in our daily lives, well, we're just talking about being replaced by it, especially for those that work in the media landscape. Enter GPT-0. It's an app launched to distinguish whether copy was written by a human or by artificial intelligence. More than 1 million users have registered since January, and the brain behind the app is just a 22-year-old from Princeton University. A student is also launching a new program called Origin, which aims to weed out disinformation in the online media generated by AI. It secured $3.5 million in funding so far, Ed.
Yeah, let's stick with AI. IBM introducing a platform for large companies to train and use AI models. When it rains, it pours, Caroline. The company leaning in on its Watson legacy to stand out in a crowded field for AI tools. Have to say, not doing much to support the shares this Tuesday, down 1.7%.
Wishing the week away.
Right, and at a 7-month low. So many headlines in the field of AI. Now, coming up, regional banks resume their sell-off as uncertainty hits the sector. We're going to discuss that next in our weekly Wall Street Beat. This is Bloomberg. Time for Wall Street Beat. PacWest and Western Alliance led regional bank stocks lower today as the hard-hit sector resumed its decline. The drop comes as investors remain unnerved by a rash of deposit outflows from banks and increasing concerns about general stability. Plus, LinkedIn, the latest tech company to join the wave of job cuts. The company plans to shut its Jobs app in China and cut about 716 jobs as the networking service further shrinks its presence in the world's second largest economy. And a group of firms, including Goldman Sachs and Microsoft, are joining a new blockchain system aimed at linking disparate institutional applications, potentially encouraging broader adoption of distributed ledger technology in financial markets. Participants in the Canton network, which will start testing some features in July, say the system offers better privacy and controls than currently available. AI, at the same time, it will achieve a scale and standard appropriate for financial institutions. That all according to a quite long statement released by the companies on Tuesday.
Yeah, a little one to dig into. Basically, blockchain is back. Meanwhile, what else is back? Celebrities endorsing brands. RX3 raising $150 million from athletes, from celebrities for its second equity fund, where they really analyze some consumer opportunities. We've got an exclusive interview for you coming up. Nate Raab's going to be joining us, managing partner at RX3 Ventures. That's up next. Meanwhile, another stock that we've got an eye on, Nintendo. Well, the Mario Maker is learning and warning of big slowdown in the Switch console sales. This is a key concern, but actually Nintendo managing to tread above water at the moment, at least over the last few trading days. But it seems as though maybe one too many consoles out there, Ed. You know, you're the expert on this one.
Yeah, look, I am tracking Mobileye. We kind of paired some earlier gains. We were up sort of more than 9% after we did an interview with the CEO. The company reaching a deal with Porsche to basically give them their advanced driver technology, assistance technology going forward. The CEO telling me that actually we could see the tech in real cars in production sooner than we might think. Have a listen.
Normally, when you get a design win, it's between 2 to 3 years until you have start of production. So we're talking about the same time frame, but we started working a few months early before this announcement. So you can do this math and come up with a start of production.
I would say, Caroline, this is a deal that Mobileye teased in recent weeks, particularly on the earnings call. We're wondering, who is this mysterious European automaker that Mobileye is doing business with? Well, it's a pretty decent one, Porsche. So it'll be interesting to see if this moves the needle for them and they get some more deals.
Yeah, and I mean, always useful when it's a luxury brand, a brand that's well known and well loved across Europe. But really, this is about bringing things to the bottom line, right? And how much it actually starts to impact our real life, our real world, and the way in which we start to drive. I don't know. It seems as though it's interesting when these older luxury names seem to really want to adopt this new technology.
Yeah, and they're looking to an expert in the field for driver assistance, both on the chip side and the sensor side. See how they get on. From San Francisco and from New York, this is Bloomberg. Welcome back to Bloomberg Technology. I'm Ed Ludlow in San Francisco.
I'm Caroline Hyde in New York, and let's dig into some of this market action. Halfway through the show, Ed, I'm looking at what is sentiment a little bit more lackluster on the day. We're off by 0.7% on the Nasdaq. We're worried about some key themes here in the US. The debt ceiling, of course, keeping some investors on edge. We're also worrying about China, potentially more of a hit to that economy than we're anticipating. Imports not as fast as we wanted. Golden Dragons, so some of those Chinese-listed companies here in the United States, or Chinese companies listed here in the US, are on the downside, 2.5%. KBW Bank Index, keep an eye on some of these regional lenders. We are still worried about them. PacWest is on the downside once again. So a lot to think about from the macro perspective, but also let's dig into the earnings, the micro. Have a quick look at what's on the move in terms of your individual tech names on the day. Look, Amazon manages to outperform. It was actually up more than this. It's adding, in terms of points perspective, to the Nasdaq and the Nasdaq 100 today. It's unveiling the fact that you might be able to buy Amazon products even when you're in a gaming or virtual reality sphere at the moment. So don't worry, you can order that Amazon kitchen towel no matter where you go. Palantir, as you mentioned at the top of the show, Ed, up 22%, absolutely soaring, biggest move since 2021, as they say, look, this AI app that they're developing, the software that will be used even in the battlefield, there is unprecedented demand for it. PayPal, though, on the downside after its earnings, because operating margin not as strong as wanted to be seen, even though they're seeing volumes increase in terms of overall payments processing. They're doing too much white labeling. People want to see more of the PayPal payments going forward. And I'm looking at Fisker off by 6% fully, actually, as we worry about the software in its new SUV and whether or not that's looking pretty clunky for the time being, Ed.
Right, from the public markets, let's go over to the private markets. The venture fund, RX3, has just raised $150 million from athletes and celebrities for its second consumer-focused growth equity fund. The fund was co-founded by football star Aaron Rodgers, venture capitalist Byron Roth, and Nate Raby, who joins us now for an exclusive interview. Nate, good morning to you. Why are all of the LPs athletes, actors, celebrities?
Yeah, thanks, Ed, Caroline, for having me on. I think the reason we have a lot of these athletes, celebrities, and actors as LPs, it really provides us access to consumer brands across the growth sector. And not only are we able to provide capital, but we can provide value beyond that capital and really move the needle and help drive revenue to these brands.
When you look at the portfolio companies or potential portfolio companies, do you think that having celebrity backing as an investor and then endorsement increases the likelihood that you will have success and then a successful exit down the road?
Yeah, I think it definitely can if there's the authentic relationship. So we really strive to align our differentiated LP base with brands when there is that authentic relationship. I don't think you can set it up where the days of where they just get paid to do a post, those are kind of long gone. So we really try to foster authentic relationships between our differentiated LP base and our brands.
Some VCs that I've been speaking to, Nate, have said the one area that they are not going anywhere near are consumer-led companies right now, consumer-focused companies, because of the economy that we're in. Why is it still the great hit for you?
Yeah, for us, because we have the athletes and entertainers, it's easy for them to get behind because it's products and brands that they use on an everyday basis. So we invest across health, wellness, active lifestyle, beauty, pet, and these are all brands that they can feel, touch, and use in their daily life. We have shifted our focus from kind of high growth DTC consumer brands to more consumer essentials, profitable brands that have strong fundamentals behind them.
Always got to feed your pet. Talk to us a little bit, though, about some of the overall valuations that you're seeing. Are you getting a better entry point when you're starting these conversations? And where do you think some of the opportunities are? And what is a dislocated market?
Yeah, I think there's definitely been a healthy reset in the market across private equity. We're looking at it. We've only made one investment out of our second fund, and we're well positioned to kind of take advantage and really help provide value to these brands. So we're excited about this vintage because there definitely has been a healthy reset.
Healthy reset that in many ways, Ed, has not just been seen across technology companies and in the private markets, but in the public markets as well. But really, a lot of this is about having technology at its core, a way in which you can speak to a mass consumer via the power of, well, social media and big brands that happen to be big individuals, in this case, Ed.
Yeah, I guess in that vein, Nate, when you guys are making an investment decision, a deck hits your desk, do you then invite all of these LPs that would be involved in the endorsement of this company to participate actively in that investment decision, or do the three partners just make the decision on their behalf?
No, great question. So our LPs and our athlete celebrity investors, we're return focused first. We don't require anybody to do anything, but rather, if there is that natural alignment, we do go out to our existing LP base and see if there is interest, and it is a brand that they would get behind. They're not involved in the day-to-day investment decision, and they're not required to do anything for the brand. But we do try to align ourselves with brands where there is someone in our network that we can provide value to.
Nate, Ashton Kutcher told us on the show last week he raised $243 million for his AI fund in just 5 weeks. How quickly did you raise this fund?
Little more than five weeks. Ashton Kutcher has a strong brand in the investing side. That's very impressive. Definitely took us a little longer. So very impressive what he did. But we're happy to say we're oversubscribed with our second fund here.
What about artificial intelligence? What about the ways in which that is seemingly upending every business model? Is it something that you're looking at?
Yeah, I think it's something that all of our brands across the consumer spectrum are going to have to take a look at and how they can incorporate it into their company. I think it's still early days here, and it's definitely something though that we're looking at and will be a part of our consumer brands.
Nate Roby, thanks for the time, managing partner at RX3 Ventures. Meanwhile, coming up, we're going to stick on the focus of investment. VC firms continuing to tout their commitments to AI native companies. We're speaking with a partner from Bessemer Venture Partners. We're going to dig in really to the nuance of the portfolio and what they're building in AI. That's next. This is Bloomberg. It is time now for our VC Roundup. Investment fund Prosus is exploring potential divestments from its emerging markets fintech company, PayU. Look, sources are saying it's working with Bank of America to gauge interest in PayU's business outside of India. It could fetch as much as $800 million in the potential deal. Meanwhile, Taiwanese battery maker Prologium Technology is looking into funding an evaluation of about $2 billion to ramp up growth in 2024. The EV battery supplier, which is backed by Mercedes-Benz, is in talks with potential advisors to raise as much as $300 million. According to sources. And Aura, the Finnish company behind some of those pricey health tracking rings, says it's buying a little-known tech startup called Proxy. Proxy makes digital identification tools. Ed?
Yeah, loving those private startup and venture stories from around the world. Let's stay in the VC space and welcome Samir Dalaki, partner with Bessemer Venture Partners. $1 billion. $1
billion.
For AI.
For AI.
But from an existing fund.
From an existing fund. We have lots of flexibility with our existing funds to be able to deploy it. The message is really clear to entrepreneurs out there. We are committed to AI and investment in AI native founders.
Okay, tell us, Samir, how you sort wheat from chaff at the moment. We had, of course, many VC come on saying there's plenty of opportunities to write checks at the moment, but not all of the companies are as strong as the other. How do you understand that they're really doing something foundational within AI?
No question, and that is fundamental to our job, is to be able to sort those. I will just say I've been in software now for 28 years, served as CEO of 2 different companies, joined venture capital recently, but I'll tell you, I've seen these seminal moments in technology history where it becomes clear to the mainstream that we have made a technical leap forward and everything about life and work will be different. I saw it with the Netscape moment in '95. We saw it with the iPhone moment with Jobs in '07. And there's just no question in my mind that we will look back at November 30th of 22 and say that was the ChatGPT moment. And everything about the future is going to be different in great ways. And I think that incumbent on us as venture capitalists, if I take the Netscape example, the first one that I lived through, we need to go find the next Jeff Bezos. And I know he's out there and or she's out there, and we would love to talk to her. And we have to be able to sort the Jeff Bezos from the next Amazon from the next web van.
Yeah.
And that's hard to do, but we're excited to go do it. And we want to signal to the market we got $1 billion of capital here to deploy into this new breakthrough that we think is going to change the world.
And we're looking at some of your portfolio, Jasper, DeepL, for example. Samir, there is currently this discussion about whether big tech or indeed walled gardens will win out. We see, of course, everyone talking about OpenAI and being relationship with Microsoft. We think about the competition with Google, but many are also talking about, well, open source. We're also seeing how Hugging Face makes an impact on that. What do you think about that sort of the dichotomy we're getting at the moment?
Absolutely. I think you're going to see continued innovation at all layers of the stack. We're seeing open source flourish. Costs are coming down really quickly. I do believe, if you were to ask me as a betting man, I think at the foundation model layers, we'd probably see a redux of the cloud wars, where the big tech provides the biggest platforms. But I think you will also see open source solutions. I think you'll see vertical solutions that are smaller LLMs trained to solve a particular problem set in a given vertical industry, et cetera. And so I think we're just going to, and then of course at the application layer, I think you're going to see the creativity of the world's entrepreneurs unleashed and problem solved in novel ways, and there will be thousands of those solutions. So I think this is one of those moments where I genuinely would say trillions of dollars of market cap will be created from this AI moment. And it's not, I say that not because my crystal ball is any clearer than anybody else's. but because I'm a student of history and I've lived in 28 years through the previous platform shifts, and every other platform shift has led to that level of innovation, creation, and market value creation.
Which areas are you pulling back from or hitting pause on so you can commit $1 billion to AI native?
The fun thing for me about the AI investments is AI is not a category, in my humble opinion. I think it is going to be embedded everywhere. They're the AI natives. We will invest deeply, and that's what this fund is all about. Every one of our portfolio companies have heard the message, how are you adopting and rethinking your solutions in the context of this technical leap forward? And so I think we're seeing it everywhere. And so I believe we'll continue to invest meaningfully behind all the places we have historically, vertical SaaS, horizontal SaaS, and cybersecurity, and healthcare. We do invest behind crypto as well. We've got a DAO, and so I believe crypto as well. I think all of these categories will fundamentally adopt AI because it's just a great new capability.
Psychologically and mechanically, is the timeline for exit different for an AI company or an AI adjacent company or a native AI company, AI native, and the type of exit?
Yeah, I would say yes, and I think it's faster. So the companies that I've invested in so far, as an example in AI, Jasper and DeepL, are two of the fastest growing software companies that I have ever seen in 28 years. I've seen a lot of companies. These folks, they're rocket ships, the adoption, because they solve a very real problem for customers. They each have tens of thousands of paying business customers already. And so I think we'll see exits even faster. I think these are IPO-worthy companies. And so I think that kind of exits will be the same, but I think they'll be even faster than what we've seen in the past.
What we've seen, and you just mentioned crypto there, is not only talk of a hype cycle, but also, Samir, talk of lack of regulation. How are you seeing round corners? I know you said your crystal ball isn't good as others, but I'm pretty sure it is because that's why you're a VC. What are you foreseeing in terms of regulatory strain and the race for AI being a certain and safe one?
Yeah, first off, I think the hype around AI is underhyped, given the impact I think it is going to have on the way we work and live. In terms of the regulation, I would say, in my experience in business, it is so uncommon for me to see all parties agree that regulation is needed and want to collaborate together across policymakers, founders, technologists, et cetera. And so I'm very confident that the industry as a whole is going to address that. I think there are some obvious and no-brainer areas where regulation will come into play that'll be good for everybody. Where I'm focused is, gosh, the amazing technical leap forward here can solve things in healthcare, in industries that I think could be in education that can be game-changing for us as humans across the world.
Caroline, the humble opinion of Samir Dalakia, partner over at Bessemer Ventures with a cool $20 billion to play with.
Yeah, quite phenomenal. Meanwhile, coming up, look, we're going to talk the sexy world of vehicle inspection. But it is getting sexy, funnily enough, because of AI. The firm UVI is raising $100 million in a new round. We're going to be talking with that CEO, that co-founder, Amir Hiva is going to be with us. Ed.
All right, let's stick with auto tech. Lucid, moving to the downside. We're a softer by around 8% in the session. Look, they had a previously guided range, 10,000 to 14,000 units for the year. They've kind of restated that towards the low end, 10,000. Supply chain troubles, production troubles ongoing. Not a lot of positive news coming out of that company. Track the stock. This is Bloomberg.
Now for what's going viral. UVI has just raised $100 million from investors, including General Motors, CarMax, and look, the company is using artificial intelligence for vehicle inspections. Pleased to see with us the person who can explain exactly how, CEO and co-founder Amir Hiva. It is great to have some time with you, Amir. So I drive in, and what? Automatically you can understand what's wrong with my vehicle? How is this going to work?
So exactly. At UVI, it's kind of, you can think of us like an MRI for the vehicle. We have a few systems. You simply drive through our systems, and then we're able, within a few seconds, to really understand the full condition of the vehicle. We're taking images of the tires, the undercarriage, the whole exterior. So if you have any leakages, any expired tires, any issues, the wear and tear of the tires, we're simply able to find out everything.
Amir, Hanako Ventures led the round, but GM did participate through its venture round. I thought we used that as a sort of case study. Do you do business with General Motors? What is it that you actually sell to the automakers or to the service shops?
So we have quite a few partners. It was published that we work with General Motors. We work with them mainly on their dealerships to be able to service their customers better. It's really important for us to give a better customer experience while someone driving into the dealership, exposing kind of the issues and really understand the full condition of the vehicle. We are working with them on the dealerships, but also we have more partners like CarMax, like Volvo, like Hyundai and Toyota that invested us in the previous round. We're also working with them as well.
Bloomberg reported that the deal valued UVI at around $800 million. How difficult was that to raise the funds in this environment from those partners? And I guess, were you wanting to hit unicorn status?
I think right now we're really focusing on building value. Samir just spoke about companies that really needs to prove that they have customers or bringing value to their customers, and this is exactly what we are doing. We are working with all of our partners, where GM and the others, to make sure that our products bring value not only to our customers, but also to their customers. And this is what is important, and this is why we were still able to raise fairly a lot of money, especially right now, which is slightly harder in terms of everything that is going on with the economics.
Caro, they describe it as the MRI machine for vehicle inspection, but really this is a story about artificial intelligence.
Yeah, and I'm interested, Amir, to that end. How do you actually say that this is an artificially intelligent, at its foundation level, company? Because you're running it through images, I'm assuming, to be able to understand whether your tires are looking good or whether other parts. But how do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
Right. So basically, what we're showing the investors, how does it really work, right? How we are able to really find all the issues at the vehicle? How do things work in the back end? The fact that we're able to break the vehicle into the different parts, the fact that we're able to find different things really, really quickly. These are the things that are important to our investors to make sure we have a really strong foundation of models and AI-based models that can really work for every vehicle, every type of vehicle, and any condition of the vehicle that we're seeing. And this is kind of why it's really important and kind of the strengths of AI, because it really helps us to even support things we haven't seen before.
Yeah.
So if there's a new vehicle, we haven't seen it before, we're still able to find most of the damages on that vehicle, even when we didn't see the specific type or model of the vehicle. And that's kind of the strength of what we're building.
UVI is based near here. Well, you're in Jersey.
Right.
You came from Israel. Where is your tech talent at the moment for this?
So both. Here in Jersey, we have offices both in Jersey, but also in Ohio. And we also have an office in Israel. We also have offices in Germany and the UK.
Very quick, Amir, where will you build and manufacture the systems here in North America? Where?
So we're now manufacturing here in Indianapolis. And that's help us to scale a lot quicker and to ship more systems to our customers.
All right, our thanks to Amir Haver, the CEO and co-founder of UVI.
Thank you very much.
That does it for this edition of Bloomberg Technology. Stay with Bloomberg Television because we're speaking to the Nikola CEO, Carol, Michael Loscheller, who's coming up with me and Matt Miller and John Erkman in the next hour here on Bloomberg TV.
Two power people that love all things autos sitting down with Michael. Meanwhile, do not forget to check out our podcast. You can find it all on the terminal. You can be online on Apple, Spotify, iHeart, wherever you like to consume your audio. Come do it with us and get your AI fix, because boy, are we focused on it at the moment. From New York, from San Francisco, this is Bloomberg.